Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY system since 2003 for individual traders and professional institutions which I consult with on a weekly basis. Anyway, let's go ahead and get started with this comprehensive newsletter. This is our back end, so I'm going to go start the recording process. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a nice long weekend. As you know, the U.S. markets, cash markets were closed on Monday for MLK Day, and they resumed trading on Tuesday. All right. Futures are trading now, and at the moment, ES futures are down about 5 points. So we'll see how they fare in the open. Anyway, again, this is the comprehensive newsletter for January 16th, 2022. By the way, I had an extensive write-up here with all my key points, and it was lost. So very annoying, but I just didn't have time to go ahead and try to type that out again. I wanted to get this recording out. Again, just listen to my audio commentary, and I'll discuss everything as we get to the charts. If you happen to be new here, these weekend newsletters tend to be very comprehensive. We cover a lot of charts, sometimes 100 charts, anywhere from 40 to 50 minutes. Okay. Again, I hope everyone had a nice weekend. So you can see the newsletter is divided into 9 major sections. And let's go ahead and get started here. So the first image below, this is a 30-minute chart of the S&P. As you know, in December, the market, after the initial sell-off from mid-December, was trading in this range, okay? And then it finally started to rally. It broke out of the range, and it's been a pretty decent rally out of this point. Because this was such a long contraction, out of contraction becomes expansion, and so we expected a pretty decent move. Now, what we're seeing here, this is the pattern we're monitoring in the short term. I put it here at the top of the newsletter just because, so you don't have to wait, 10 or 20 charts later to finally see this. This is what we're watching here in the short term, what we favor. You can clearly see 5 waves here in a wedge-like formation. You have a little MACD divergence here. We're looking for, once this completes, we're looking for a pullback to form a higher low, and then we think we'll get another rally to the upside. Okay? And the reason we think that is because, given especially some of the recent breadth that has come into the market, we think that the market will likely push to quite a bit higher prices before overall the bear market resumes. Okay, so we are looking for this to complete some sort of ABC pullback here, higher low, and then I think that'll be a buying opportunity. And I think the S&P could possibly rally to 4150, maybe even 4300, 4350. Okay, so that's our more favored view at this point. Next, moving to our mechanical trading systems, our reversion to mean systems. So we've had a few systems that have taken shorts on ES and SPY. Again, these are sent out to our subscribers. So on the left here are 2 ES systems, the high, mid, low. I have 2 versions of this. Version 1, version 2, and both are in a position short. And on SPY, I have 2 different subsystems that are short. The high, mid, low is in a second entry short, and the QE BTS is also in a second entry short. Again, if you're new to Breakpoint trades, these are reversion to mean systems. They look for trade opportunities when things get stretched. They'll get in, and then when the move occurs that they're looking for, they'll get out. They're high probability trades. Overall, a lot of these systems have 80 to 90% or higher winning trades. We have 23 systems that we run across SPY and ES that we send out trade notifications for. 2022 was a very active year for the systems because of the volatility. The systems do a lot of trades in volatile markets, and there was about 130 trades last year collectively on SPY and ES. They knocked it out of the park. Not every trade was a winner, but most of them were, and it was a very good year. And I'm hoping this year will also be a great year for the systems. I'm really looking to expand upon the systems this year, guys. So one thing I'm going to I'm doing at the moment. So the SPY systems here on the SPY ETF, these trades, all the trades are end of day. So they occur at the closing bar. And it's always been tough to get the trade notifications out for that by the close. ETFs trade after hours till 8 p.m. But, it's always kind of a mad dash to get these trade signals out to subscribers and, them to enter the trades either near the close or after hours, stuff like that. But what I'm doing right now is I'm actively converting these systems to next day open systems. That's going to be a lot easier for all of us. And how would that work? So I would actually get the signal trade alert at the close of the bar, but the actual trade would not be entered until the next morning. So that gives me a chance to get out the notifications to all the subscribers in the afternoon. That allows them all night to see it and to plan to enter the trade the next day if they're following the systems. So it's going to be a lot easier for everyone to follow. I'm in the process of converting these systems. It's probably going to take me a couple weeks. And I'm planning to eventually add a basket of ETFs, and I'll also have those work by end of the next day open format. Again, once I got a little more of this done, I'll let you know. But otherwise, at this very moment, we're not using them. We're using our default end-of-day systems, and this is what's active. We have 2 systems short on SPY and 2 systems short on ES futures. Next, image number 4. This shows you the open systems that I just showed you above. So you can see at the top we have the 2 SPY systems that are in first and second entry shorts, and at the bottom we have the high, mid, low version 1, version 2. Okay, we'll see how these fare, but if that wedge plays out that I showed you a few minutes ago, the 30-minute S&P, and we get a pullback, these systems will likely cover on that. These shorts are not looking for a big trade. They're just looking for a quick pullback in the market, and they will exit. Okay. I will, of course, let everyone know once they decide to exit. Everyone will receive a trade notification, email, or SMS communication. Next, let's go ahead and move back to the general market. So image number 5, this shows you what the general market did last week and on Friday. So for the week, again, the index has closed up very strongly. The small caps, Russell did the best, up 5.3%, followed by the Nasdaq. Those areas were lagging the most, especially the Nasdaq. The S&P was up 2.67%, while the Dow was up 2%. Remember, the Dow had been holding up the best last year, and I think as the market has this rally, we're going to see the Dow lag behind a bit, and we're going to see the Nasdaq tech area and the small caps outperform. As far as the major market sectors, again, most of them closed up for the week except for drugs, consumer staples. Consumer staples tends to move opposite of the general market, so that makes sense. But nice gains here, especially for the energy areas. Oil services up 7.3%, and metals and mining up 6.3%. Currencies, US dollar down 1.5%, so it continues to be weak. That's helping the market and been helping precious metals and commodities. Cryptocurrencies all had a good rally last week with the market. Bitcoin is up again tonight. It was coming out of a nice basing pattern. Which really done well is the crypto stocks like Mara, GBTC, MSTR, etc. Commodities mostly to the upside. Natural gas was down though. Agriculture and coffee. And precious metals had a good week. Gold up 2.9%, silver up 1.87%. GDX, the miners, up 3.5%. We identified a bottom in the GDX back in October, and that has played out beautifully. The stocks really started to rally in November, and they've been in a nice long uptrend since. As far as bonds, TLT up 1.5% for the week, and the 10-year and 30-year Treasury yields continue to fall. Next. Item number 6 shows the economic news calendar for this week. Obviously, market's going to be looking at the PPI, CPI coming out. We'll see how that looks. And of course, What we think, since earnings season is going to be starting, we think the market will likely hold up into that ultimately. And let's go and jump to these index charts first. So the first chart below, item number 7, shows a monthly chart of the 5 key major indexes. I went ahead and put the percentage moves up they are for this month so far. So the Dow so far is up about 3.5% for the month of January. S&P is up 4.16%. Nasdaq up 5.9%. Russell 2000, IWM up 7.3%. Sometimes as January goes, the whole year goes. But again, I wouldn't put too much credence in that. But so far, nice rally on the major indexes this month. Next. Chart number 8, here's a quarterly view. Again, I just wanted to update this. It's obviously far from the end of the quarter. But one thing I pointed out, a quarter ago was these indexes were near the middle Bollinger Band. So remember, each candlestick is 1 quarter. So there's 4 of them per year on these charts. You can see the middle Bollinger Bands have been acting as longer term support. The Dow bounced off of it, the S&P, the Nasdaq, and the Russell. So that was a logical area to rally from. Next. Chart number 9, here's a yearly chart of the S&P. Again, I still think that we're in some sort of longer bear market. I think the S&P, it would really shock me if the S&P goes and makes a new high from here. I think overall, eventually we're going to at least tag or undercut this 9-year EMA eventually. Next. Chart number 10, here's a monthly view. So back in January of last year, early January, we identified that as a high for that previous bull market, wave 5. We expected a bear market 2022, which played out. All right. You can see the S&P is right at this downtrend line. And again, we favor some sort of further upside rally over the next several weeks, maybe 4150, 4300, 4350. Again, I don't think the S&P will go back to the highs. The only way that's going to happen, in my opinion, is if all the central banks reverse what they're doing and stuff like that. But quite honestly, if that occurs, inflation is going to go through the roof. And really, the Fed does not want that. So, but I think we're in store for a pretty decent rally here. And guys, if the market just pulls a rabbit out of its hat and manages to go back to the highs, no big deal. We'll follow it along, and our mechanical trending systems, like our KISS systems, will catch that. Next, chart 11. Here's a weekly view of the S&P, and you can see this expanded wedge pattern. Again, you can see these lower highs, and you can see we closed right at this downtrend line, which is connected 3, 4, 5, the last 5 touches. This will be number 6. Maybe it pauses here, but ultimately I think we do break this. Now here's some things to consider. The move off this October low to here, 4100, was about 600 points. And by the way, in October, if you recall, we undercut the 200-week moving average and we regained it. We talked about that as being bullish for that time. That was important. The 200-week moving average is an important moving average on these weekly charts. Make sure to add that to your weekly charts if you haven't done that. So anyway, this is 600 points. I think overall we'll have a higher low here and another rally. If, as my comments here show in the box, a 1-to-1 move where you get a symmetry move from this low up to here, this could take you up to around 4350. A 618% move would be about 376 points, roughly 4140. So we'll see what happens. Again, short term, we have the downtrend line here and the 50-week moving average. I do think we'll take these out, but do we pull back a little first? We'll see. Next. Chart number 12, here's a daily view. Again, you can see the same downtrend line here. Clear resistance. Again, we closed right at it. So are we going to pull back here first? We also regained the 200-day moving average again. Remember the last couple times here, we gained it for about a day or two and then we lost it. So we're back above it. The important thing, can we hold it here? So what I think is either going to happen, we'll pull back here, form a higher low, then we'll attempt a breakout. Or will break out now, and then we'll pull back and find support on this broken downtrend line. That'll be a buy opportunity if that happens. So here's some of those. This would be your symmetry target based on this move, and this would be your 61.8% of this 600 point move. Okay. Again, guys, we had a clear 5-wave completed pattern there in October, which we talked about, which was more bullish for the market, that it had put in a better, a decent trade low for a while. Okay, so we had that. Then we had this 5-wave rising wedge, which then argued for a higher low, which it looks like we got. So ultimately, I'm favoring some sort of wave C move up to these levels. Next. Chart 13, here's that chart I showed a couple weeks ago with the various scenarios. Again, under the bearish view, you could go right down. I don't favor that. The scenario in green, would show a new bull market where we have a wave 1 up. That was a wave 2 pullback, and we're going to go up in wave 3, eventually have 4, 5, and go back to the highs. Again, I don't favor that. It's not impossible, but it is an option. It's not my favorite view. My favorite view is in purple. Again, which still allows for a decent rally. So if you look at this, guys, wave counts a lot of times will align together and you can make money on that. So both these counts, the bullish one in green and the other one in purple, both align for a rally up to much higher prices. So using that information, we can make money on that. Next. Chart 14, here's a 2-hour view. Again, we had this nice move up. We had 5 waves down here. We had that nice long consolidation. Remember, after 5 completed waves, you expect a decent rally, a decent low or high, and that was a decent low there. So we now rallied up into the little resistance area here. We'll see if we can get through here, or we need a pullback. I could see a pullback here, especially if that 30-minute chart plays out. Next. Chart 15, here's another 2-hour view. Again, this is another possibility. Not my favorite scenario, but you could see here a move up to this resistance and then a pullback to here. This would be basically a symmetrical move with this. You'd form a higher low here, then you would have another big rally. Again, I think if we pull back here, we're likely to form a higher low in this range, 3,900-ish. But this is still a valid option. Next. Chart 16, here's a 60-minute chart. So early last week, we talked about this. We were showing this channel, and we said price, if it pulled back to the channel, would be a buying opportunity. And that's what it was. Price pulled back to the channel, found support there, decent rally off of it. Next. Chart 17, here's a 30-minute view that I showed, first chart in the newsletter. Again, in the short term, we're monitoring this wedge, this little 5th wave. And if this is the correct pattern, we'll soon get an ABC pullback retracement of this, but it should form a lower high. I mean a higher low, that's what the odds would favor. Next. Moving on. Moving on to our KISS trend system. So here's the daily S&P. This is our KISS trend system. Last year, these systems for the indexes stayed mostly in cash. You can see on the S&P, it was long briefly from the July to August timeframe, got out, and then it was long from October until early December, right here where it hit the smart trailing stop at 39.13. So again, the way these systems work, they're designed to catch uptrends in bull market, strong uptrends, and they progressively raise these stops, which we call smart trailing stops, constantly protecting your profits and giving you an exit plan. They work pretty well. Again, last year, beyond that bear market move, they were not long for long periods of time, 1 or 2 months. Okay, so recently, the system stopped out there at 39.13. It's not back long yet. Notice it's price closed right near the ATR here, just a few points above it. It needs a confirmation here. If we get a confirmation, it'll likely go long. So early heads up, if we get a little more price moving to the upside here, the system should be going back long, and it'll place a stop right around this recent higher low. Next. Image number 20, these 4 time frames. with our indicators. So first off, the daily chart on the upper left, we're right near this ATR. On the half day here, all these other time frames, we broke above the ATR, which is now support. And otherwise, we're uptrending here short term. Next, chart number 21, here's the Dow. The Dow led last year. It was down the least. Older economy stocks, low PEs, which is what the market favored over the high growth, Kathy Woods type stuff. So again, I think overall this will lead in the bull market, in the bear market, continue to do well in 2023. But short term here, we're probably going to see some of the growth stocks, high beta stuff, have stronger rallies as they're most oversold. Next, chapter 22, VYM, that's the Vanguard High Dividend ETF. This is my favorite ETF, especially in a bear market. Last year, it only lost 0.4% because of the dividends. And it's up nicely this year. You can see, it doesn't look like a bear market at all for this, does it? It's basically right at those early 2022 highs. Next. Moving on to the triple Qs, Nasdaq, chart number 23. Here's the monthly view again with the fibs drawn from the March 2020 low. That previous bull market, that was a classic blow-off move. You could see the slope degree there, how much stronger that slope was than it was previously from 2014 to early 2020. That was a classic blow-off of that previous bubble. The Fed is now in QT, tightening. The money supply has been declining for the first time in God, I don't know how many years. So overall, that's still, that suggests we're not going to go back to anything like this, maybe in our lifetimes even. But anyway, you could see the triple Qs over the last several months have found support at the 61.8 fib area. Not surprising. Next. Chart number 24, there's the weekly view. Again, nice rally last week, up 4.5%. We still have the downtrend line to contend with. You can see how underperformed these things have been. While the S&P is right at its downtrend line on the daily and weekly chart, the Qs still have a little ways to go. But I do think these also have more room to play catch up. So I think the Qs will rally a stronger percentage over the S&P and Dow during this this bear market rally. Next. Chapter 25, here's a daily view. Again, you can see the downtrend line here. We're still a ways from that. Look how far we are still above the 200-day moving average. Remember, the S&P closed above its 200-day moving average. So again, this area's lagged severely, but it also has room to catch up the most. Again, so next big resistance is the downtrend line here. Next. Chart number 26, here's a Renko chart. Each box size is 3 points. These Renko charts give you a nice clean view. You can see this area was a big support. There's an air pocket below there. We held it. And you got a resistance here, right around this, just below the 290 area. You can see your downtrend line. So these are some things to watch. By the way, guys, one thing we do, we share all our chart links for our newsletters. So subscribers to Breakpoint Trades, you can pull these charts up instead of just looking at static images. You can view them any day. You can save them into your own charting stock charts platform. That's something that other services do not provide. Next. Chapter 27, here's a 2-hour review of the triple Qs. Again, had a nice base there like the S&P, rallied out of it, and you also have this little wedge pattern. And you got a resistance, kind of a supply zone up in here where we're looking for maybe a pullback. Next. Chapter 28, here's a 30-minute view. Again, just like the S&P, you could see it's kind of identical. You have the same range that it broke out of. You have the same 5-point wedge. So ultimately, we're looking for a pullback from this wedge once it completes, some sort of higher low in there, and ABC pullback. Next. Chapter 29, here's the triple Q's KISS system. So just like on the S&P, it closed right above, just slightly above the ATR, but it has not issued a buy signal again. You can see the system, went long back there in November, stopped out in early December at 276.60. So Again, this is an important area. If you look at the 60 stochastic, it's right here at the 50% area too. And should the market follow through this week, this system will also go long. Remember, this is the trending systems. These aren't the reversion to mean systems. Next, chapter 30. Here's the 4 time frames we like to follow. Very similar to look to the S&P. The fact that we took out these resistance cycles, these are resistance cycles, showed you that was a trending type move that we had late last week. Next, moving to the Russell 2000 IWM, it was up 5.3%. It was up the most out of the indexes and closing above this downtrend line. You could see the IWM found support at this area. This was previous resistance, so back in early 2020. And it became support, which was tested twice in 2022, and it held. It was a good buying opportunity down there. Moving average ribbons are coiling here, trying to turn up. So again, this could have a nice move up should the market hold up like we think. Next, chart 32, here's a daily view. Again, we had that double bottom-ish down there held in October. We're taking out a trend line here. This is nicely above its 200-day moving average. It's been above it now for 3 bars. So it's stronger than the S&P here with respect to the 200-day moving average. So there you go on the indexes, guys. Let's move on, look at a few key sectors. Chart 33, this chart shows you 10 of the major sectors. Again, most of the sectors were up. We'll look at a few individual names, not all of them. Chart 34, here's XLK Technology weekly view. Again, overall, remember that's been the laggard. That was the worst sector last year. Still overall, quite a bit of ways from this downtrend line, but I do think that'll be tagged over time. Next, chart 35, here's the daily view. Again, still a long way to go. It's still quite a bit below its 200-day moving average there. Keep an eye on that. Next, chart 36, XLC Communications Services contains a lot of those former FANG names, Meta, Google, etc., Disney, Netflix. But you can see this precipitous decline. This is the symmetry. Monitor symmetry here, because if this breaks symmetry, and it's pretty close to doing so, that would argue for a overall, at least an end of that initial major downtrend. And that would argue for overall higher prices for a bit. Next, chart 37, XLF Financials, weekly view. They've been strong. Next, chart 38, XLF on the daily. Again, well above its 200-day moving average. It's been one of those stronger sectors. You can see you got a kind of a horizontal resistance here to monitor. Volume patterns look decent as well. Next, chart 39, IYT Transports. You got a nice clean horizontal resistance here. This has also been a little stronger sector. Next, chart 40, XBI Biotech. This sector interests me. I've been monitoring this big long consolidation pattern. So overall, this was a big consolidation, and it's possible that it's entered in some sort of wave 3 or wave C move. It broke out of this coil last week. It was off the highs on Friday, but if it can hold here or even a pullback, as long as it stays above the downtrend, broken trend line here, I think it'll find support and rally again. Next, chart 41, XLE energy sector. Again, the energy sectors, guys, are in bull market uptrends. They have been for the last couple years. I talked about them early last year, being in a bull market. They had a great year. Yes, they had a pretty good consolidation from the middle of the year last year into the fall time frame, but you can clearly see this is in a strong uptrend. These stocks have low PEs, and that's what the market focused on last year. And I think these will continue to do well over time. Next, chart 42, here's the daily. Still hasn't gotten back to the highs here, still monitoring this short-term pattern. Next, chart 43, oil services. Now, this has been much stronger than XLE Energy, the oil stocks. This broke out to a new high here. Next, let's take a look at emerging markets. They have been leading that and China. So here's the S&P versus emerging markets. You can see how much stronger this has been. Emerging markets bottomed there in October, and they've been much stronger than the S&P. Next, chart 45. Here's emerging markets chart. This is a 2.5-year, 3-year chart. Again, emerging markets started downtrending in early 2021, so well before the general market entered a bull market or entered a bear market. And I said to monitor these symmetry rallies. And the bullish thing is we had a bullish break in symmetry there in November, which argued that we had formed a pretty major bottom in emerging markets. And that's been the case. We got our higher low, and they continue to ramp up. They are a little overbought here short term. You can see on the RSI. Next, chart 46. Here's the S&P versus the Chinese market, and this has really outperformed. Look at this move up in the China market. Clear 5 waves here. Much stronger than the S&P. Next, chart 47. MCHI. That's one of the ETFs. I think this is the leveraged one. You can see a clear bullish break in symmetry that we had a couple months ago. So this area has been rocking and rolling. Next, chart 48, BABA, one of the major ones. Been in a long-term downtrend. Here, monitor symmetry. It's getting close to that symmetry target. Breaking this would be yet another positive for it. All right, let's move on and look at some market indicators. Chart 49, the NYAD. So one thing that was bullish for the market while the S&P was going sideways here in late December, early January, the NYAD was going straight up. It was leading. That was a bullish sign. It indicated that there was positive breadth under the surface. And so what happened is we had a lag effect, and then the S&P ended up rallying to play catch up. But this argued for a good upside move in the market, and this is one of the reasons I do think the market will work higher maybe over the next month or two. Short term, it's a little overbought here. It's been outside the upper Bollinger Bands for quite a few days, so it's probably due for a rest here. Next, chart 50. This shows you the breadth thrust indicator. Many of you may have heard that. Martin's Weig breadth thrust. And technically, this did not meet the 9-day threshold here, but it was pretty close. I think it was 10 days. But you can clearly see this thrust move, this big sharp move in the advanced decline, and that was a positive for the market in the short term to intermediate term. Next, chart 51, the VIX. So the VIX has been declining. It broke down to the downside from this coil pattern we were showing. Now, very short term, guys, the VIX is below its lower Bollinger Bands for 2 consecutive days. Remember, when it closes back inside the bands, that'll constitute a market VIX Bollinger Band buy signal and a market pullback. So this is one thing I'll be monitoring come Tuesday, early this week. Next, chart 52, looking at some other indicators. This is the CPC put call ratio. Remember, back in December, I pointed this out, that it had spiked up to 1.91. And that was a good reason for the market to have put in a pretty decent low there. That spike was way out of whack, out of norm here. And these spikes a lot of times occur near nice trade lows. And this was just way out here. Next, chart 53. Here's another view of the put call ratio. This one uses the 200 length for the Bollinger Bands. And it was, again, way outside the bands. You could see it. When you use the 200 length for the Bollinger Bands instead of a 20, it doesn't get outside the bands very often, but every time it's produced pretty decent market lows. Even last year, it called for a lot of those rallies. Next, chart 54. Here's the NASI summation index using the 2 and 5 exponential moving averages. This crossed over a couple weeks ago. Was a nice cross there, and prices moved up nicely since, as you can see. It's not a perfect system, but it's been a pretty good guide. Next, moving to bonds, chart 55. Before we get to bonds, here's the one last indicator, the Nasdaq highs minus lows. Again, you had a nice divergence, positive divergence here that was building. And you can see how far this has rallied back up while price didn't move much. So that was a positive divergence. Next, moving to bonds, Chart 56, high yield corporate. The market tends to follow this and continues to be moving up strongly. It's well above its 200-day moving average, so that's a good sign for the market. Next, Chart 57, TLT 20-year bonds. Again, it rallied basically near the 50-day moving average. It lost it, then regained it. So nice rally. Hasn't taken out those last highs. It's just below the 200-day moving average. Next, Chart 58. Here's the 10-year Treasury yield. Overall, this got very extended back in October. It's had a pretty good pullback here. It held symmetry last time, but if this were to go down, it's possible it could break symmetry. So we'll continue to monitor this. Overall, long-term interest rates are in a long-term uptrend. Next, Chart 59. There's the 40-year chart of the 10-year Treasury yield. Again, the 10-year broke out of this 35-year downtrend line. We had that era of low interest rates, secular bull market of low declining interest rates. That is over. We're now in the opposite. Okay, so long term, I do expect rates to stay elevated, chop around. Short term, they could pull back here, but they're not going back to zero, guys, like they were back here. Next, Chart 60. Here's the yield curve. This is obviously still very negative. Again, a recession's coming. We'll see how deep it is. Obviously, the markets lead. They will typically bottom before the markets financials completely improve. But I still think it's still early, and we still have some interesting things coming. Next, moving on to commodities, Chart 61, DBC. Again, I consider this in a bull market uptrend. Essentially, since mid last year, June timeframe, it's been in a consolidation. To me, it's a consolidation in a bull market. Right now, it's coiling. We'll see if this resolves to the upside or not. Next, Chart 62, DBC monthly view. So, again, guys, if you look at the monthly chart, does this look bearish to you? You've had a strong move up. The moving average ribbon was pinched here, expanded, and is contracting. You have a potential ABC pullback to support. Look at your volume patterns, declining volume on a pullback. That looks very bullish to me. Next, Chart 63, here's the daily view. Short term, it took out some resistance trend line. Next, Chart 64, crude oil weekly view up 8.3%, still overall in this downtrend channel. Next, Chart 65, here's the daily view. So closed slightly above its 50-day moving average. Clearly, energy stocks have outperformed vastly to the commodity. Remember, OIH, oil services, and Schlumberger, they're at new highs. Next, Chart 66, copper up 7.8% for the week. So taking out some resistance here, big up week. We'll see if this continues or not. Next, Chart 67, in the short term, copper had a clear resistance here. It looked bullish. In fact, you could draw a little trend line here for ascending triangle, and it busted right out of there. Was up basically every day last week. Next, Chart 68, SCCO. This has been the star, Southern Copper. This was a long idea we put out for copper a couple weeks ago. You had a beautiful cup and handle look, little ascending triangle pennant here. Price busted out on strong volume, and look at this. It has been up 8 consecutive days above its upper Bollinger Bands, and that is very extended. So eventually it's going to have a reversion to mean pullback, but what a move. Next, Chart 69, DBA, agriculture commodity. Overall, it's still kind of in a coil here. It's been in a nice long consolidation since mid last year. Next, Chart 70, here's the daily view, bouncing off a little support. Got a lot of resistance above, though, to clear. Next, Chart 71, here's the monthly view again. This still ultimately looks bullish on the longer term. Got a big moving average expansion here. It's contracting. Volume's been pulling back on light volume. There's big support here. Ultimately, this looks like a bullish consolidation in a long-term bull market for commodities. Next, chart 72, uranium. So uranium, remember guys, I talked about this in 2020. It emerged from this Weinstein basing pattern, had a really good rally up from this $10 area to the almost 30. But you can see it's been consolidating for the last year. Moving average ribbon is now contracting. This looks bullish to me. Next, chart 73, here's the weekly view. Again, you can see the breakout, start of the bull market here. This breaking this multi-year trend line, strong move up initially. It's been in a long consolidation, and it's now breaking out of that consolidation after all this ABC consolidation. So these are some of the areas, guys, that look good to me long term. Uranium, DBC, etc. Next, chart 74, Bitcoin. As you know, Bitcoin broke down in November, but it basically based out. Then it finally started rallying up, and early last week, nice move. It is a bit overbought here in the short term, but overall, I think this will move up with the market. Next, chart 75, here's a weekly view of Bitcoin that we're monitoring this potential falling wedge pattern. Now, under this labeling, this rally here could be a wave 4, and then you get still a wave 5 eventually. But then once that wave 5 completes, you could have completed a large falling wedge, and Bitcoin may be then set to rally again. But right now, we favor this more as a wave 4 bounce, longer term. Next. Last couple weeks, what has really moved are the Bitcoin type stocks. So GBTC, this is not my favorite, but super rally out of this pattern where I gave it, and then had another breakout for this 10 area. Next, chart 77, Mara, one hell of a move. Again, I mean, you could have bought this thing in the 3s or 4s a couple weeks ago, and it hit 8 on Friday. So the stocks have really had a pretty strong bounce. A lot of things have. All right, let's move on. Let's look at the US dollar, chart 78, US dollar weekly view down 1.6%. So overall, very strong pullback from the highs, closing slightly below the 50% fib retracement. Next, chart 79, here's the monthly view. We had this labeled as a fifth wave move, and so far it's been playing out. Next, chart 80, there's a US dollar ETF UUP. You can see the symmetry break. Gave you an early heads up months ago. Next, chart 81, here's a daily view of the dollar. So again, pretty strong correction from those September highs there. Next, chart 82, here's the Japanese yen. One heck of a rally also, incommensurate with that pullback in the dollar. I pointed this out early on. I pointed out this positive divergence that occurred in October. And I said to watch the symmetry, which was clearly broken there in October, early November. Next, let's move to precious metals. So this area has done pretty well, especially the stocks over the last couple months. Here's the monthly view of gold so far. Gold is up about 5.25% for the month. Now, this shows you the bigger picture of gold. The bullish view, very bullish view, would have this as a large ABC correction wave 4 from the last couple years. And if that's true, gold should rally to new highs in a wave 5. And I'm sort of favoring this view, guys, just given the backdrop of what we could see happen, etc. Next, chart 84, there's the weekly view of gold. Again, the stocks have been outperforming, as you can see in the ratio. Gold is retraced about just over 61.8% from the move off the early 2022 highs to the lows. We'll see if this can continue. Next, Next, chart 85, here's gold on the daily view. Again, very nice move from the November lows. Again, if you didn't go long in this time frame, if you waited for the confirmation break of the downtrend line of the channel and the 50-day moving average, November, you've had a nice uptrend. You've formed a series of higher lows where a stop, trailing stop can go. Very nice move. Next, chart 86, silver. Again, basically at a rounded bottom back here. Found support in that demand zone that we had pointed out last year. Here's a downtrend line from the highs to monitor over time. Next, chart 87, here's the daily view. Again, you can see this nice rounded bottom that it handed. Next, looking at gold stocks, GDX, the miners. So really nice rally, broke out of this resistance, and you can see the 61.8% fib from the early 2022 highs is up here at 33.30. You could see when the moving average ribbons get too expanded like they were back there in September, October, that's when you look for reversals, major trend reversals. Next, chart 89, here's the daily view. Again, just continues to uptrend nicely. As I stated, we pointed out this fifth wave low in September. That ended up being a nice low. It would have been hard to sit through this coil consolidation, but your real breakout occurred here in November, and you got your series of higher lows. Just trail the stops up. It is uptrending nicely. Looks good. Next, chart 90. Here's the GDX GLD ratio. Since the stocks lead, we like to monitor this. Again, you can see how on that breakout on the index, GDX occurred in November. It also occurred in the ratio. Moving average ribbon had flipped. Had a really nice buy signal confirmation back then. Next, chart 91, GDXJ, that's the junior ETF. Looks similar. Next, chart 92, SILJ, that's the silver junior stock ETF, also uptrending. Now let's take a look at some individual names, guys. Some of these have done very well that I've had. Chart 93, AU. This was a long idea I had back in early November, and look at that move. Just basically going vertical. Don't chase it here, but been one hell of a move. Next, chart 94, BTG, another one. Really nice move out of the coil that I pointed out back in December. Next, chart 95, here's EQX. This one still hasn't had a big move, and it's coming out of a basing type formation. To me, this looks like a good low risk long with a stop. Next, chart 96, GFI. I pointed out the ABC correction, 3-wave, and it's rallied nicely since then. Next, chart 97, HL, Hecla Mining, silver stock, continues uptrending nicely here. Next, chart 98, Newmont, one we've talked about, just continues to steady eddy up. It's now above its 200-day moving average. Next, chart 99, here's an interesting one on the weekly. AGI broke out of this nice trend line here in November, but you have basically a bullish cup and handle in the longer term chart. So maybe it consolidates here a bit, but longer term, this looks pretty good. All right, guys, following up on some other trade ideas. Chart 100, CBay. This is a long idea of ours back in early December. Cup in hand, and look how beautifully this sucker's played out. Congrats if you played it. Next, chart 101, Disney. I pointed this out a couple weeks ago as a falling wedge right into this long-term support, MACD divergence, stochastic divergence, and it broke out last week. Next, chart 102, 9. That's an energy play. We pointed this one out in early October. Had one hell of an uptrend. Look at that move. The thing basically tripled. Next, why did it have such a big move? Here's the weekly chart, guys. It came out of a big long base. Whenever you have stocks that break out of a multi-year basing pattern on volume, those are the stocks you want to hold for trending moves. These are some of my longer term targets. Next, chart 104. Can't not talk about Tesla. So here's Tesla. Overall, I still think it's in some sort of wave 4 bounce here. Maybe it works up to these ranges. 50-day moving average, we'll see. Tesla lowered their prices, as you know, pretty dramatically here recently. Next, chart 105 here. This chart shows you some of the longer term supports. If that is a wave 4 bounce, and Tesla eventually goes to new lows again. These are some of your longer term supports, well below 100. Next, Trevor 106, Apple, Crapple. Put in a nice little low here. We'll see what this does. Again, could be a fourth wave bounce, or it could have been a better low here. Gonna depend, but we'll see. Next, Trevor 107, EYE, long idea from last week that never triggered. This is still a valid long setup over resistance. Next, Trevor 108, FRTX. Here's another long idea from last week, never triggered. Over $2 is the trigger. Next, Trevor 109, McDonald's, kind of a flag here, one to watch. Guys, I'll look for some other long ideas too. I'll either post them late tonight or tomorrow morning. All right, guys, have a wonderful evening. Again, happy MLK Day, and I'll see you tomorrow. Take care.